Hello friends, welcome to my channel. If you are new to my channel, then try subscribing. So today we are going to take an introduction on the accounting standards. So I had a request on a session to explain on AS9, that is accounting standards for revenue recognition. So I thought that it would be necessary to consider explaining or giving an overview on what is accounting standards, why there is a need to it. So that's why we are having today's topic. Now let's move on. So in this session, what all we are going to learn is what does the term standard mean? Why accounting standards are required? When is accounting standard required? Areas where accounting or accounting guidelines are being dealt with, and applicability of accounting standards to various entities. And we'll also briefly see on what is Ind AS and what is our Indian accounting standards, which is being prescribed by the ICI. And finally, we'll just also have a brief understanding on IFRS and what is USGAAP. We'll also understand like why we are trying to converge our accounting standards with the international standards as well. So now let's understand what does the term standard mean. So in common parlance, standard means it is any model, norm, or guidelines which is being used for comparative evaluations. So what does this mean? Standard is required where there is any comparison required. We are to compare two different things, and for facilitating such comparisons, a standard is required. So considering that financial statements key characteristics is uniformity and comparability, it is mean to say that there is a need to follow a predefined practice or predefined structure or a framework so that any two financial statements of two different industry we would be able to compare without any bias. Why accounting standard is required? So having known that the key characteristic of financial statement, that is a need for uniformity. So in earlier slide we understood what does a standard mean, and we also understood why for the purpose of comparison there is a need for some standard to be followed. Why? Because of the key characteristic being there is a need for a uniformity. So if there is no uniformity, let's see what all issues we had faced because of non-availability of such standards. There are chances of different valuation principles being followed by different entities, which would lead to misinterpretation of the net worth of the entity. Unable to compare the financial statements confidently. And we have faced several instances where in cases of mergers and acquisitions, we have acquired entities and later getting to know that the net worth is very low and compelling the entity to go for an impairment. They would book for an impairment clause just a year or later after their acquisition. So in order to avoid such uncertainties and such unforeseen cases, like it is necessary to follow some prescribed standards in preparation and presentation of the financial statements. And also, finally, investors can make well-informed decisions on their investments if a standard is being followed. Otherwise, there is always a possibility of the profits being goofed up or the balance sheet being misstated, and the investors would turn up to have high hopes on their investments, but unfortunately wouldn't fetch that much results at the end. So, in order to avoid all these uncertainties, there is a need. So, if there is a standard and the financial statements follow such standards, then all these issues could be overcome. So, that is why we need a accounting standard. Okay, now let's see when we need to apply these accounting standard. Obviously, any entity which undertakes an activity which is in nature of business or commercial nature or industrial in nature, resulting in an economic activity, has to follow an accounting standard. So, say for example, an entity doesn't follow any such activity, be it a business or commercial or industrial nature, then the accounting standards are not required. As you may know, you might have seen earlier videos also about the not-for-profit organization So such non-profit organization work for totally a different cause, which is not business or commercial or industrial in nature. So the way they prepare their financial statements is not profit and loss account and balance sheet. It is something different, income statement and receipts and payments and balance sheet. So if their nature of business is doesn't come under these three categories, then even a portion of it is not in the nature of business or commercial or industrial in nature, then these accounting standards need not be followed. So the areas of financial accounting which we will be dealing with are pronouncements by ICAI. ICAI prescribes the accounting standards to be followed by non-corporate entities. For corporate entities, they need to follow the Ind AS, which is being prescribed by MCA, that is Ministry of Company Affairs. There are specific statutes, say banking, insurance, and NBFCs, which lay down their own statutes in which they provide guidelines on any specific area of their financial reporting or on the whole. So their respective industry should follow these statutes by which they are being governed with. And if the double entry system of bookkeeping is not being followed, in such cases, incomplete records, which is nothing but single entry system of bookkeeping, there is a way by which the financial statements are to be developed with the help of the single entry system of bookkeeping. And finally, for financing and investing activities, that is also an area which the financial accounting is being involved. For example, an entity may source funds either through IPO or through commercial papers or certificate of deposits or through venture capitalists or any other mutual fund. So in any of these cases, there is a need for financial accounting. Of course, there is a transaction taking place in financial nature, so they need to follow. But there are statutes governing it and they need to follow them. Similarly, income tax has also laid, especially those entities which are being subject to tax audits. They need to prepare their financial statements by following the income tax accounting standards, which are being laid down by Income Tax Act. Items which I have mentioned here are just the high-level view on the areas which the accounting standards be dealt with. So the areas which I have mentioned here are wherever there is financial nature, accounting need to be done. But financial accounting is specifically governed by certain principles or standards. These are the areas in which the financial accounting is to be done based on the standards or guidelines prescribed by any specific statute or any specific board or authority. Next, let's move on the applicability of the standards in India. Let's bifurcate into two as corporate entities and non-corporate entities. Corporate entities, the MCA has mandated the adoption of the Ind AS in a phased manner from the accounting period 2016 to 17. For non-corporate entities, the accounting standards issued by ICAI are to be followed. So for this purpose, the entities are being bifurcated into 4 groups as to level 1, 2, 3, and 4. Maybe at some other occasion, we may see on to even for corporate entities, they are further bifurcated into small and medium entities and SMCs and non-SMCs. And the basis would be mainly turnover and borrowings and whether they are being listed or in the process of listing, so on and so forth. There are many criteria to be fulfilled. So there are bifurcations. Depending on that, they would belong to an SMC or non-SMC, and depending on that, the applicability of the accounting standards and to what extent the standards are applicable and whether there are any exemptions available would differ. Similarly, for non-corporate entities, they have been bifurcated into 4 levels based on certain criteria, be it turnover and so on and so forth. So maybe regarding this, we can have it in a separate lecture. Why I have given this is in India, the applicability differs. For corporate entities, they need to follow the Ind AS, which is the accounting standards which are converged with the international standards, that is the Ind AS. And for the non-corporate entities, they need to follow the accounting standards which are being issued by ICAI, which is the AS, the Indian GAAP. A brief description between IFRS and USGAAP. IFRS is issued by IASB, that is International Accounting Standard Board, and those are global standards which all other countries adopt their individual country standards to that of the global standards. So, for example, in India, we have our set of accounting standards which we have converged with the international standards and named it as Ind AS. On the other hand, USGAAP is issued by Financial Accounting Standard Board, which is a US-based board, and those standards are prescribed and are for only US. US GAAP are being named as ASC, so their names go as ASC, Accounting Standard Codification, whereas IFRS standards are either IAS and the numbering goes like that, or IFRS. This is a very brief distinction between these two. Why I tried to bring up this is IFRS is the base and which is globally available. And one more thing which we need to understand is why several other countries wanted to converge their country standards with that of international standards is that there was more of global interactions and entities have been acquired across the globe. So for this purpose, there was a need to, when a company from one country is being acquired by another country, in order to compare themselves, once again, the same comparability is the topic under discussion. So when two entities belonging to two different countries need to compare their performance, then there was a need to restate their numbers to that of the international standards or to that of the other countries' standards, so that there would be an apple-to-apple comparison. So in order to avoid such confusions, or in order to avoid such restatements, we later framed in countries started to frame a standard which converged to the international standards. So the need for convergence was more and had been rapid, where there are more of international transactions and international exchanges being taking place in terms of business and commercial activities. So that's for today's session. Hope you like today's lecture on the introduction of accounting standards. Do subscribe to this channel and click the bell icon, and also leave your feedback on or any suggestions which or any other topic which you would like to learn more in the comment section. Also, I have left links on the description box regarding the earlier accounting standard Ind AS 16 which I had delivered before, and also other videos relating to accounting. Please wait for the next lecture on AS 9, that is revenue recognition, and stay connected to this channel. Thank you.